Bring on board Sridhar Shivram to talk about markets, what he feels where markets are headed, and for a change, we'll not start with India, we'll start with the global markets.
Sure.
Everybody is worried about what Fed will do. From Goldman Sachs to JP Morgan, the CEOs are using the word recession freely. But look at Dow. Anisha gave me this data in the morning. The Dow is on course to register its biggest gain in last 50 years. What is reality?
Yeah, so I think the reality is that the global macro setup doesn't look great.
And yet Dow is in a party mode.
But Dow's still down 10% for the year. And if you look at Nasdaq, it's down, say, almost 22% for the year. So it isn't. So there are select pockets which are holding up. Look at emerging markets. It looks like a carnage there because emerging markets are down almost 25%. The large markets like China, Korea, Taiwan, they're all down over 25%. So obviously there are some serious issues as far as global markets are concerned. Now, within that perspective, I think the Indian market and the economy does look, very good. It looks like there is a lot of positivity that is coming through. The stars are aligning. But having said that, I think the overall setup is not great for even the Indian markets to just run away from here. If we get a benign global environment where things are a bit calm, then I think our markets could do really well. That, in my view, will possibly be after the first quarter of next year.
Sridhar, what can disturb the market? Do you think if Fed insists that they need to storm the growth to bring inflation down, do you think that will, in a sense, trigger another wave of selling? Because if interest-free returns are going higher and if currency is weak for a market like India, obviously it means outflows, not inflows.
Correct. So I think those are the challenges for India. One, what Fed does, keep in mind that even for our own markets, we are going to see another possibly 50 basis points rate hike. Inflation is still very sticky, still in the 7 handle. Possibly this month we'll see closer to 6.5. But still, that is still higher than RBI's threshold. So I think the macros are not looking great. If that continues, we'll see some sort of earnings downgrade. We're also already seeing that for the tech companies in the US. I mean, you initially saw the stocks correct, and now you're seeing the earnings getting downgraded. We may see similarly for, say, the Indian tech companies in say in third or fourth quarter, and for some of the other companies who are export oriented if there is a recession in the US and in Europe. So I think those are the challenges that we are facing. Interest rates going up, inflation being high, these are not very good signs for a sustained bull market. We could outperform emerging markets, we could do well relative to developed markets, but for us to get into a sustained bull market, we need global environment to be more conducive.
But in that event, Sridhar, the resilience for India continues. And I'm guessing at some point, IT would have corrected enough to at least, begin to nibble in. Are we reaching anywhere close to that point?
So I wouldn't, I'm still bearish on the IT sector. And I think just the example of what's happened to US tech companies and their earnings over the last 1 week is a testimony of what could happen for our IT companies in Q3 and Q4. Markets anticipate slowdown, and when the actual numbers come, we see some more correction. My view is possibly fourth quarter of our fiscal year could be the bottom for the IT sector, because that's when we start seeing serious downgrades and guidance for the next year, which in my view could be a bit muted because a lot of them are dependent on what happens to global tech spending. And if we are entering a recession in Europe and possibly recession in US sometime next year, we could see slowdown. So I would say that yes, the stocks have corrected, but I think the earnings expectations haven't yet corrected that much, and we could see that sometime in the fourth quarter.
So IT is something which has the street mix, but the consensus on the street seems to be the banking space.
Yes.
Everyone is a buyer there, but which segment do you think will likely outperform in the entire financial space?
So we are very bullish on the large cap banks. I mean, basically any bank which can, garner CASA and deposits in a tight liquidity situation and in a rising interest rates environment, that becomes a key. And we are already seeing signs where from the banking sector standpoint, the credit costs have started to significantly normalize. In fact, I would say that they're lower than pre-COVID right now. And we've been very bullish on the banking space. When I was here last time, I also mentioned about, large cap banks, just buy any of them and you could, make a lot of money over the next 3 years. And we saw Mr. Uday Kotak talk about the Cinderella moment for, the banking system. No, it's any bank. I mean, it doesn't matter whether it is, HDFC or ICICI. It's just all the banks look extremely good. Some of them may have technical issues, but over a period, these will get, ironed out. Maybe even some of the top 3-4 PSU banks, because all of them look extremely good right now, because credit cost is the big thing, and we're seeing loan growth coming back, and we could see significant earnings upgrades coming over the next 2 to 3, 6 quarters.
You like large banks, but that's largely because of the firm you represent. Your firm is a large firm. I call the Enam family as the first family of Indian stock markets. Yeah, I mean, they are the most respected investment firm in India. But for our viewers who've got limited capital, are they better off buying a mid-cap bank rather than a large cap bank? Because one is looking at percentage gain here. The percentage gain, if you're managing large money, investing large money, perhaps lies with an HDFC bank or Kotak bank. But for our viewers who do not have the pot size like Enam, are they better off buying mid-tier banks?
Well, I would say that, as I said, any bank which has the advantage of garnering good CASA or a deposit franchise. So there are smaller banks also who are doing very well as far as deposit franchise is concerned. But for smaller investors, I would say the easiest way of buying this is just to buy a financials mutual fund. I mean, you don't need to have a lot of cash.
HDFC Bank and
No, actually a lot of them have smaller banks also, but it takes care of the issue that you can't buy, larger banks because there are, you need more money or whatever. I mean, I think these banks could give you easily 20% compounded over the next 3-4 years if this Cinderella moment, which Mr. Uday Kotak is talking about, continues, and which we think is very much possible.
The Cinderella moment is there's a 12 o'clock. So what is that 12 o'clock? That 2 years, 3 years?
This is the start of the party right now. So we have some time before the 12 o'clock clock comes, because we've gone through a worse period than the 12 o'clock, which is once in a maybe a black swan event of COVID, which we've never seen in our life. And our banking system and the banks have come out with flying colors despite all that. So I think the proof is in the pudding that we've already seen happen 2 years back.
Okay, so any bank, any large bank is looking good. The party is just starting. Sridhar, what I would also love to get from you is, and we've talked a little bit of global, the traction that's coming back for value stocks. A year ago, we were all, doing cartwheels when it was coming to the Zomato IPO, Nykaa IPO. We've all seen all of those. Look at the valuations. They're down 40, 50, 60% now. What do you make of the story?
So Nayantara, this has been our view, at least my view, right from the beginning, that I've lived through the 2000 bull bear market, and to be honest, we all made mistakes during the 2000 bull market. And one of the mantras of investing is you learn from your mistakes and you don't do that again. And when stocks are trading at 50 times revenue with some sort of a concept, I'm not saying these are bad companies. Infosys, Wipro were also trading at 50 times revenue in 2000. They were extremely good companies, but it took them 7-8 years to come back to their 2000 highs. In fact, if you see Zee Telefilm hasn't reached the 2000 high even now, which is almost 22 years from that day. So it didn't mean that Zee was a bad company. So I think in our view, the pricing was totally wrong and was irrational exuberance as far as the market's concerned. And I think some rationality is coming back. If you ask me, we are still not buyers in most of them, but some of them are looking interesting. We think as the dust settles down, we'll see the business model also evolve. And we are watching the space carefully. We are not in a hurry. There is enough opportunities in the market right now to buy. This is not on the priority list right now. Let me put it that way.
Can you tell us what is on your priority list? Banks clearly are. Any large bank besides that?
I would say telecom sector looks extremely interesting. We've seen over the last 5 years that the industry revenues, which were about 2 lakh crores about 6 years back, went as low as 1,50,000 crores. Now they're back above 2 lakh crores. We are seeing ARPUs moving up. That looks like an interesting space, and we are quite overweight as far as that is concerned. Industrial, specifically on the defense side, is looking interesting, especially on the offsets. India has been enforcing the offset rules for defense companies, and we are seeing very interesting opportunities as far as offset is concerned. A lot of the other companies are more bottom up. We are seeing a lot of opportunities, but I would say that these are still times to be very cautious. Invest in companies where the earnings outlook is very sure. Global macro do have an impact on markets and how valuations shape up. So it's not like the bull markets that we saw in 2003 to 7, where you could buy anything and you saw almost all sectors participate. This is going to be quite a challenging year even for the next year, and earnings will matter more than anything else.
Sridhar, the other space I guess you cannot possibly ignore, and since you talked about defense, is the PSU pack. I mean, year to date, it's actually the Nifty PSC index which has been the best performer.
Yeah, so we've been quite bullish on value over growth for almost 2 years now. And the view was that market was completely ignoring value, and growth stocks were being priced as if there's no tomorrow. We are seeing significant correction as far as growth is concerned. And what we are also seeing is that value now is getting into some sort of growth because of their respective companies and how some of the policies have shaped up. But I would say that one of the big disappointments has been the lack of privatization. That would have been a big kicker for the re-rating of the PSU stocks. That hasn't happened, at least till now. We've seen very few of them and nothing significant on the listed space. But I would still be long the value. If you look at the top 10 Nifty gainers, most of them have some sort of a value angle to it. Even on the FMCG side, we've seen ITC being one of the best performers, which is more value when you compare the other stocks. So we still remain bullish on value stocks over growth right now. But as we speak, we are tilting towards growth. We think that growth stocks are coming back.
Okay, I really appreciate your time, and wish you a wonderful year ahead. Never too late to change Diwali presently. So what, we are not in the Diwali attire. We can always wish you belated happy Diwali,
yes,
and have a wonderful year ahead.
Yes, thank you very much.